Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at the small caps that were in play today. So first up, let's take a look at ticker symbol INUV. This was the big winner today, closed up over 200%, 223% gain. Okay, so yeah, you have RSI now pushing really hard at 86, Fasto's now above 80. As you can see here on Fasto, it fails to stay above Fasto for long, so keep that in mind. And 86 is really frothy. So for RSI, you've got plus DI now way up here at 65. You know, when you start pushing above 40, that starts to get to elevated levels on plus DI and ADX. And so yeah, check out the giant volume spike. Huge volume for this thinly traded stock. Look how low the average daily volume is. They just walked it down on super low volume, and then today, boom, giant gap up open above several moving or all the moving averages. And so notice how today's candle is floating above the upper Bollinger Band. It's down here at 92 cents. And so the downside risk is if the candles do work back into the bands, because the upper Bollinger Band is down here at 92, you have the 400-day simple moving average at 87, and then you have the 300 and 200-day simple moving averages down here between 76 and 80. And so these would be the support levels below. And so if it worked back into the bands, it would likely come back down and hit that 70 to 80 range. And so that would be the downside risk. Now the upside potential here, check out the INUV weekly chart. So you can see here it had been, this is from 2017, you could see this very long downtrending channel, and it had the big bounce last week off of the low. Look how they took it all the way down to the bottom, and then giant gap up on huge volume. Look how it's the largest volume in years. Okay, so today the share price hit the red line, which is the 200-week moving average at 153. If you go over here, you could see this was support from back here in the beginning of 2017, and that turned into resistance. So that's going to be the major level to break. Right now, though, it needs to get above the blue line and the black line. That's the 300 and 400-day simple moving averages, and you could see here it's lining up with this resistance at this red line here. This was a major resistance level right here around 130, and so it's going to have to be able to turn 130 into support, get above that 138 level, and then break above 153 to head higher. If these levels fail to break, this week's candle could work back into the bands. And once again, you've got the upper Bollinger Band down here at 102, and you have the 100-week moving average at 98. Those would be the first support levels below. Okay, so let's look at INUV on the 15-minute chart. You can see here it was the trading was getting really tight as it was pushing higher, and then it broke out above the ascending resistance line here, and then it channeled sideways into the close. So the two big levels to break are going to be the $1.50 level. It's going to be all about getting above $1.50. If it starts closing above $1.50 on the 15-minute chart tomorrow, that should signal, okay, yeah, it's pushing higher. It wants to keep heading higher. Now it has to get back above EMA's 4 and 8. That's at 139 and 140. That's the pink in lime lines. If it starts forming candles below that level, you can see that it closed below here on this candle at 315. If those levels turn into resistance, that's going to signal downside risk. That's the opposite of when it was heading higher. Now you're going to know if the chart's breaking down by whether or not the middle Bollinger Band at 131 holds. If you see it trading below 131, it could come down here and test that lower Bollinger Band at 104. Many times when the middle Bollinger Band breaks in the 15-minute chart, stocks drop to the 50 simple moving average, and notice how that lines up with the 80s that we were just talking about. That's down at 83. That was also the low close today. So that is the downside risk. Okay, let's look at TTNP. Closed up 18% today. So yeah, it's back in action. This is a chart from the last run. You can see here it's back up at this resistance level on RSI at 58. So we're going to see if it can bust through that level. You can see back here it had hit this level back in June. The annotations over here are from the last run when it broke out above the 50-day simple moving average. I'll get into that in just one second. It got above the 50 on RSI or Fasto. The long upper wick on today's candle lowered Fasto, so it's got plenty of juice to run. Yeah, the thing is here is it closed above the 50-day simple moving average. You could see back on the last time this chart was made was on this white candle here, and it was hitting the 50-day simple moving average. The next candle it had closed above that level, but it formed the black candle, and that was a signal that it could pull back, and it did. Ended up dropping below the green line, came all the way down, and look where it bounced off. It bounced right off the middle Bollinger Band. Keep that in mind. That's always the reload level if support holds for stocks that are in an uptrend on whatever time frame you're looking at. And so in this case, the daily chart. And so it's always a good strategy for the daily charts. Keep that in mind. And so now that 50-day simple moving average is the key level to hold. If it can stay above 42 tomorrow, that should signal it wants to head higher. Notice there's a gap over here in September between low of day on this candle and high of day on this candle. That gap did fill back here on this white candle. And so the top of the gap, it always becomes a tough resistance level to break. And so it's going to be all about trading above 50. If it closes above 50, it has a good chance of coming up here to 60. It gets above 60. That was, support and resistance here. If it could break above the 60 level, then you have the 100-day simple moving average at 67 as the next target. That's the next target if the 100-day simple moving average holds. You can see how this has a megaphone kind of pattern, how it's getting bigger, the ascending support and ascending resistance, and you can see these black candles are lining right up with that 300-day simple moving average at 110. Okay, so yeah, let's look at VTL here. So yeah, VTL had a nice day, closed up 22%. So yeah, as you can see, this thing has been beaten down. It got below 30 on RSI, and they kept it below that level for an extended period of time. It hadn't closed above 30 on RSI since the big gap down back in September, and so breaking above that level would be a signal the chart is really heating up. Fasto is back above 80, so we'll see if it can stay above that level. Many times these penny stocks have a hard time staying above 80 on Fasto. You can see it's been in this very tight channel since the gap. There's a gap down from over here in September between low of day on September 11th and high of day on September 12th, and after it came down here and found support, it just pretty much formed a sideways channel. You can see now it has like ascending support going on. It's starting to break resistance, and today it did close above high close horizontal resistance. That was the closing price right here in the first week of October. You can see that was the top of the recent last several weeks, and so the close above that does signal more upside potential. Now it has to close above the closing price on the 18th of September. If it can break that level, the 50-cent level will be on deck. It's going to be all about breaking 50 cents. If it can get above 50 cents, it could run up to the bottom of the gap. Keep in mind the bottom of the gap is always a tough level to break. Today, it did close, it's back above EMAs 4, 8, and 13. You can see this orange line here. It closed above that level. That's the first close above the orange line since way back here, but before the drop. Okay, the last time it was above the middle Bollinger Band back in August. Okay, so the close above that level. Notice how every single one of these candles is below the orange line until today. That's a bullish change in trend. So I would use that as your stop loss level if you're trading this. It has to stay above EMA 13 at 35 currently. If it's holding that level, for in the short term here, that should be the signal. Okay, it's pushing higher. It also has to break resistance. So what we want to see here is a break out of this sideways channel. You can see where it's breaking through the upper Bollinger Band and how tight the Bollinger Bands are. The upper Bollinger Band is this purple line and the lower Bollinger Band is this purple line. The break above, that's signaling that it wants to head higher. Now it just needs to follow through. Okay, let's take a look at AMPE here. This will be the last stock in this video, ticker symbol AMPE. So this is heating up. It has RSI above 50 for the first time since it dropped below back here. Notice there's also another gap. I didn't write everything in there, but this is the bottom of the gap. This is the top of the gap. There's a big space here. And so it dropped down, a very similar pattern to VTL. Okay, so it has the sideways channel, right? And then today it finally closed above the green line. That's the 50-day simple moving average at 51. It needs to stay above that level. If it were to drop back below the green line, that would signal more consolidation, that it's not ready to go. It looks like it's trying to, break out of, this multi-week, just the last few weeks it's been trading below the middle Bollinger Band. The last time it broke above was back here in the beginning of October, and it was unable to break above high close resistance from back here in August. And so what's going to have to happen, it has to get above the closing price here from October, and then above this red line, and then above this red line right here, right around 62, 63. That's going to be the big level. If it can get above the 62, 63 level, then it could possibly run back up here into the 90s. The bottom of the gap is right up there around 98. Okay, so let's look at it on another time frame. If you look at the monthly chart for AMPE, you can see it came down here and it formed a bottom in 2017, ran all the way up here from 50 cents, below 50 cents, right, way down here, 30s or 40s, all the way up to $5.25, and then look, it ran all the way back down again. Notice how the lower wicks here. Check out the lower wick on this candle in August. Look at the huge volume bar. It looks like people loaded down here. Now for this is the monthly chart, and so this month's candle will not set until the closing bell on the last trading day of November. So there's a long time for this candle to change. But right now, it's forming bullish engulfing. It's very light volume, but the big thing is it could work its way back to EMA 4 at 78. Okay, so let's look here, and then also, as you can see here, it has this looks like a double bottom. It bottomed, came up, and then it looks like it's forming a double bottom in this 50-cent support range, support zone. If you look at AMP here, AMPE on the 15-minute chart, you can see on this candle right here at 3 o'clock, it broke above the sideways channel, and that signaled it wanted to head higher. And then right here at 3:15, it closed above high close horizontal resistance. This closing price at 11.45 is the big level to break. That close above signals it wants to head higher. It kept making higher highs after breaking above the sideways channel. That's a positive. So now it has to get above this 52.75 level. If it's trading above that level and closing above that level on the 15-minute chart, that should signal it wants to keep pushing higher. Keep an eye on 51. If it were to drop below 51 in the middle Bollinger Band, that would be a red flag. It would signal that it's not quite ready to go, and it could possibly come down here, test that 50-cent level, or possibly drop down to that 50 simple moving average at 48 cents. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.